gold, crude oil, and the DAX 30. Let me just ensure that we are live. Good, I can see that we're live. So guys, thanks so much for joining me. My name is Alejandro Zambrano and I'm the Chief Market Analyst with TradeCaptain.com. Some of you guys might know me from the days I used to work for Daily FX, which is another great website for technical analysis trading, much like Trade Captain. But obviously Trade Captain is slightly better. That's what I think, at least. Anyhow, guys, thanks so much for joining me this morning. We are gonna take a look at the markets, but before we do that, if you like the video, don't forget to smash that like button, click on the trading video, and then you have a little like button down here. We have usually about 100 people watching this video every day, so it would be amazing if we had 100 likes as well. As well, I want to remind you guys that next week we're having some special webinars. On Tuesday, Nathan is going to provide us with his insights to trading discipline and gonna teach us a few tips and tricks that he uses to keeps emotions under control. As well, later on this month, on the Tuesday, May 29th, we're going to have a special update on Bitcoin trading. As you know, Amana Capital now offers Bitcoin trading, and Ripple and Litecoin and Ethereum as well. And then introduction to hedge fund trading, which is what Nathan did for about, I think, 3.5 up to 4 years. Okay, guys, let's begin, and we're gonna start out with the euro. So the euro is trading near the lows, and the overall market is bearish below 119.98. Now, I think this little section here, my cap price, which is about 1850, and the market could potentially just drift to the downside. In other words, the euro weakening against the dollar. But this is a very fragile sort of a high, but there's maybe I would guess maybe 55% likelihood that this goes to the downside. It could, of course, also just swing up to 119, and I think from 119 you have a better opportunity to be bearish rather than down here, because the market is in a downtrend, but it's starting to approach these major lows, a little bit oversold as well. So if we sell around 118.94, we have a risk about 107 pip. If we hit the low, we make about 181, and if we go all the way down here to the low here from November 2017, then we could potentially make about 388 pip, and that's really important, dose reward ratio. I know a lot of people see that all the time, and I definitely see it all the time. Well, I can tell you right now, I am profitable, and I've done this since 2006, and having an average win that is bigger than the average loss is something that has worked for me. And we've done analysis in the past, and we know that most profitable traders, that's how they make their money. On the other hand, there's people that they make a lot of small profits and then accumulate them, and that's also possible. But in the longer run, what tends to happen with those guys is that they're right like 95% of the time, but then they're gonna have one big bad trade, and they will not accept it, because if they accept it, they'll wipe out like a month of work. So they buy more of it, and then if it continues to go against them, they buy more and more and more, and then of course if you have very deep pockets, you might be able to get out of it, but if you don't, you get a margin call. This is Bitcoin against the USD. The market is stabilizing just a little bit this morning as we are approaching the April 17th low. And the idea was very straightforward a few days ago. If we take out this low, this market turns bearish, and it did. It even went up to the optimal sell zone up here. You see we touched the sell zone with a few dollars. We touched the sell zone was as 88.98. The price went as high as 88.99. So we got it really spot on, and the idea was, put a stop loss on the other side, risk about 12%. Now the market is up about 8. And then what we said is that we reduce the stop loss to the new high, which was up here, and we're doing that again. So the new trend defining level is the level up here, and that is the May 10 high. May 10 high. And I think going forward, I mean, we're stuck in a range. This is a low here, high here, another high. And I think this could go either way now, but most likely lower. It could go up maybe to 8,400, maybe 8,880. But it's very difficult to say what's going to happen here just because we are converging. There's not like a nice trend to work with. We could, of course, like, this is something to bear in mind, that the short-term trend is bearish below this high here, and this is the May 14th high. Now, just because we take out that level doesn't mean that this market is going to, you know, rally up to 20k or 19k, where we were trading in December last year. It's just gonna be up a little, push to 9,200, and then probably trade sideways, and then continue to be a bit boring. So here you have, I think, ideally you're already short from the high or here, and then either one books profits right now and then just forgets about this market for a few weeks, because it looks like this is what we're doing. The alternative is just keep this short position for a few more days, and then hopefully we go down to 78, the actual target, and if we take that out, 7,200, and that would be a very good trade. Here's the price of crude oil, and crude oil is being bullish in the short term. The market took out that high, and that opens up further gains to the upside. If you're trading on the back of that little setup, or what I think traders are doing, is that they're probably, if they are long here, they most likely have a stop here, because that gives them an okay reward ratio. They'll risk 168 pip. If we make up to the high, they make 127. So again, they're looking to make less here than they're risking, but they were probably banking on the market to go a little bit higher, maybe 74, if not the 2011 low at 75.22. My preference, though, is for the market to tumble all the way back down to the low and look to buy it at the low. That's what I did last time. So last time the market was trading here, and the market tumbled, and I bought it at 68.30, and then as the market moved to the upside, I booked profits pretty much up here. Here's the price of gold, and gold here, the market is bearish. It was actually one of the top ideas for April and May, and the idea was that if we took out this support level here, this is going to be a bearish market. So if you're short on the back of the setup, you should be up, and the stop loss is still at the high, so we can't really make any major changes to this just yet. And I do think this market is going to go down. I think if we go down to maybe 1,270, then that's a very good opportunity to book profits. And if it does swing to the upside, unless we see like a major reversal in the dollar, I think most likely traders are going to sell again on that break. Here's the German DAX, and the German DAX is doing good. We said that either it goes down to 12,820 and we buy down here with a stop down here, or I said the market will take out this high, and it did so yesterday, pretty much when we were finishing the webinar. About half an hour later, the market took out the high, and here I said if we could take out the high, stop loss is down here, and this is going to be a risk of about 1%. The market is right now up with 0.35. At one point it was up with 0.76, but I think this market could potentially provide multiples of this range. You have resistance up here. We sort of got rejected there. I think if you go down to the breakout level, you know, that wouldn't surprise me. But as long as we trade above this low, and bear in mind it is a bit of a fragile low because it's just 1% away from price, 1.5. But as long as you're above this level, I'm gonna treat the trend as bullish, and I suspect this market could give us a few more bit of a push. So look to risk about 1%, and I think if you just look here, I mean the next major high is up here, so that's 2.61% return. And then you have sort of a little section here, so a little bit more to the upside. Maybe this more of a psychological level, maybe 1,300 sorry, 13,300. That would be about 2 times our risk. And that's the market update for today. If you are trading the news, you have consumer price index coming up in the Canadian consumer price index. That's coming up at 1:30 p.m. London time. That could potentially move the market. If you look here at headline inflation, headline inflation was pretty much around 1.6%. Last reading was a 2.3, sorry, and anticipated to be around 2.3. So inflation is rising in Canada, and that might put some pressure on the central bank to potentially act. And they will probably act at one point, but not necessarily in the next 6 months. And then you have Canadian core inflation, which was very low at 0.8, but it bounced back and to 1.4, and yeah. So higher inflation most likely boost the Canadian dollar a bit. Weaker inflation probably cost the Canadian dollar to soften a bit. You also have Canadian retail sales, but I don't think it moves the market too much. Last time I checked, I think Canadian retail sales was actually quite good in general. This is the month-over-month change, so it's literally impossible to see situation here. Actually, it's not as good as I thought. So there's just like a scrapbook of charts and things I collect. So here's Canadian retail sales. You can see that the reading for February, and obviously this reading is for March, so this yeah, no, it's actually correct then. So this is the sort of the latest chart we have. You can see how retail sales in Canada in April, this is April 2017, up until December last year was okay, but then in January and February we have very low growth here. I'm not sure if it's because of seasonality, but stark contrast here, and it actually should not be necessarily because of seasonality, because this is the year-on-year change. So you can see here how year-on-year change plummeted to levels seen, because this is the same chart but more data, sort of at levels we've seen here in the past. It's not necessarily alarming. In the 2008 2009 recession, they had a contraction of about 5%. So if it goes back down to 0, wouldn't be good, but right now this is not necessarily alarming. Okay. Sorry guys, I just had to sneeze there. Muted my microphone. Good morning, hi, I hope you're doing well. And I want to thank everybody else that is watching as well. If you guys have any questions or want to say hello, feel free to just use the chat box here. As long as you have a YouTube account, you can interact with me, and you can as well just like the video as well. So I have a big fan, and I think is in Estonia or Lithuania, that always comes and dislikes the video. That's how much he is my biggest fan. So if you can press on like here. Usually it's interesting. I show you the statistics in the past. So this is just one person from one country. Well, it's actually two now. I think they set up 2 accounts. Anyway, we're gonna wrap things up here. It doesn't look like we have any questions here, so I want to thank you so much for watching. And again, we have some good webinars coming up this week, sorry, next week, and then more this month. So click on the education and webinars, and I hope you can join us here. It's free to join. You just need to register, and that's it. Have an amazing weekend, guys, and I'll see you guys later. And yeah, happy trading. Thanks.